Hello everyone, Clifford Bennett, Chief Economist, ACY Securities, here to give you an update on the Australian inflation number, but also we're getting fourth quarter GDP data out in the USA soon. That's expected to be 2.7, 2.8%, dropping back from the previous quarter, third quarter 3.2 print. We all know the real-time economic data in the United States is far worse than what we were seeing in Q4. So early in Q4, so there was a little bit of a bounce there after 2 quarters of negative growth in the United States. Q3 had a bounce. Q4 will be up as well. All in all, it means a tragic year for the US economy. There's no two ways to really argue that. A lot of people clung to employment because there was only one economic data series that looked positive, so they clung to that. But we all know that's a function of dislocation and dysfunction. So coming over to Australia, I guess with the US data, what that means is markets are going to want to be long going into that number, but they've had plenty of time to get long for that number. So we may be in for another one of those experiences where the market stabs in both directions rather damagingly, takes out all the bull day trader stops, takes out all the bear day trader stops, and then we'll see where it goes from there. But overall, this positive print from the US will be a negative for the market. The market's been really celebrating negative economic data, but that is starting to wear thin now with the idea that it would lead to the Fed slowing. Even if the Fed were to stop now, the US economy is still going into recession. The more the Fed hikes, the deeper the recession will be, but also the longer inflation stays high, the worse the recession will be, which brings us to Australia. Now, in Australia, the RBA slowed down to 25-point rate hikes as inflation is accelerating. It doesn't get anything right, this bank. So inflation in Australia just accelerated from 7.3% to 7.8%. The monthly CPI number just leapt to an astonishing 8.4%. What's interesting in this data is that food has continued to actually accelerate. So it was 9.9% in the previous quarter, food inflation. This quarter, it has been 9.2%. So the idea that we're going to have this sudden peak in inflation is really very optimistic indeed. Inflation was widespread. Services were up 5%. Furnishings were up 8.4%. I mean, you just went across the board, and the whole of Australia is raising prices. Every business owner is raising prices to cover the costs of higher wages, the trouble of getting staff, the higher input costs. Inflation is accelerating in Australia. So the little move down we've seen in the Australian stock market could well become a much bigger move down. Well, it should, but it just depends whether markets reflect fundamentals at all these days. But the Australian dollar had a little bit of a leap, but it's unlikely the RBA is going to quickly move back to 50-point rate hikes. And at 25-point rate hikes, it's still falling further and further behind the US dollar in yield. So really, unless the RBA goes back to 50 points, there's no reason to be buying the Australian dollar on a high inflation number, which says that the Federal Reserve must keep hiking rates. Sorry, the RBA must keep hiking rates because they're only going to be 25-point increments, because it's always like a deer standing in front of the headlights. Like the governor of the Reserve Bank is known to be incompetent. It's been widely discussed. There's been an inquiry into his performance. It's unlikely he'll get a second term. So it's really bad management at the central bank of an economy is never good for an economy. And the Reserve Bank has generated this whole roller coaster affair in cahoots with the previous government, which decided to win votes by having the highest stimulus per capita spending measures for COVID in the world, even though we had one of the lowest case number rates. But it didn't save the government at the election and never was going to. But in the meantime, what it's created, along with the Reserve Bank keeping interest rates near zero, is a huge party for the Australian economy and Australian families and workers, consumers, businesses. Huge party, massive party coming out of COVID. And I said in the midst of all that screamingly positive data, this will not last. There's going to be a hangover. And at the same time, a lot of the other major banks were actually extrapolating that extraordinary period of a few months into the future as if it was the new economy. It was laughable. And these are the top economists of the top banks in Australia, as well as the Reserve Bank. And the Reserve Bank saying it'll keep interest rates down at zero until, near zero till 2024. I mean, it's the most absurd central bank policy anyone's seen in the Western world for ever, because no central banker knows to ever say anything like that. I mean, it's 101. So really poor management at the Reserve Bank and over stimulus spending through the roof by the former government trying to keep itself in office have combined to create a very abstract, abnormal boom in the Australian economy, for which we are now paying the price, and we will continue to pay the price because now the global backdrop is a global slowing. So a slowing of the global economy is the backdrop that we've created this little domestic roller coaster for ourselves. Inflation, which everyone said, oh, don't worry, it's going to go back down. It's not. It's still going up. And in fact, across many measures, it's accelerating tremendously. So we're going to see continued Reserve Bank interest rate hikes. Now, remember, 18 months ago, it was June 2020, I think it was. Where are we? 23, 22, 21. June 2021, I said the Reserve Bank should be raising interest rates now in small amounts so that it won't have to fall behind the curve and in 12 months, 18 months time, be aggressively raising interest rates to chase inflation. So that's what I said in June of 21. That's exactly what has happened. And I can tell you on this occasion, they will continue to mess up and they need to be removed. They will continue, as many people are arguing, and as the OECD has recommended. So we're looking for a situation where consumers are going to stop spending. Everything's going to be too expensive. It's going to really destroy the underpinnings of the Australian economy. At the same time that the Reserve raises interest rates, continues to raise interest rates, continuing to destroy sentiment. Housing prices in Australia are already falling at the fastest pace on record and will continue to do so. I know that there is one or two suburbs in Sydney that are down calculated 26.8% since the peak. So there's a lot of lost wealth going on out there in the property market from the peaks at least. And the stock market is down. And I think out of all of this, the Australian stock market at some point is going to capitulate and move down quickly. For the time being, the Australian market has been supported, as the US market has, by this belief that all will be well, you just keep buying anyway. That will wear thin as this degrading, deteriorating economic scenario for the US and Australia continues. So be very careful about buying too much Aussie on the back of this interest rate inflation data print inspiring interest rate hikes. The RBA, I've always said, will continue to be hiking at 25 points. And be careful staying long Australian stocks in an economy that looks like it's going to be crumbling rather severely throughout 2023. I hope that's cheered you up. Plenty of opportunity out there. Let's go hunting. Have a great day. Clifford Bennett, Chief Economist, ACY Securities.